Hello, everyone. Good morning to you. Depending on whichever part of the world you're tuning in from, good morning, good afternoon, and good evening. And I'm so excited to welcome you to another edition of our weekly Forex Morning Mastery, which, of course, is a price action based technical analysis platform. Well, before I dive into the details for today, by now you would have noticed, and if you have been following me on my YouTube, Telegram, and TradingView platform, I'm currently dealing with a sore throat, and in fact, it has affected my voice very badly. So I hope I'm able to fare during the course of the session. So I've tried to increase my volume a little bit so that you can hear me clearly. So I hope I will be able to do a better job with this little challenge I'm having right here. So please bear with me at this point in time. So with that being said here, excited to welcome you once again to yet another promising session. And in fact, we are at the first day of the week, and of course, the same day is going to be the last trading day for the month of July, which of course makes it a very crucial and important day to trade in the market. And in fact, this kind of day is peculiar with some psychological expectation. Being the last trading day of the week, of the month rather, there is this expectation that majority of the key players in the market who are taking advantage of a significant move through the course of the month will definitely want to be doing some profit-taking activities ahead of the new month. So we might likely see some reversal setups if we are looking at things from an holistic perspective. So I will definitely be delving into the higher time frame today so that we can have an idea of where price has been, what price action has been doing since the beginning of this month, and this will help us to be able to position ourselves in such a way that we can catch any reversal setup that comes in today as a result of profit taking activities. And for those who are joining us for the first time, you are highly welcome on board. I'm so excited to have you around. Well, what we simply do here is to come together as a community in anticipation of both the London and the New York trading sessions, where we do follow-up details on the assets I shared during the course of the weekend. So I normally have my watch list during the course of the weekend, which I'm preparing for the new week. And of course, I already shared them on my YouTube, Telegram, and TradingView platform as sorry, excuse me, as this is going to be a follow-up detail on that one. So if you haven't watched them, I have the link in the description box of this current video. So I implore you to watch them so that you can have a background knowledge of what we are going to be talking about today. And at the same time, it could also serve as an educational guide in understanding how to use price action to identify potential trading opportunities. So once again, you are highly welcome on board. So with that being said, here we shall be diving right into the business. But before we do, I would like to confirm that the sound quality is good, the visuals is okay. Please let me know in the comment section. I would really appreciate your feedbacks in that regard. So is everything fine over there? Is the audio quality good? Is the video quality good? Please let me know in the comment section. I really appreciate your feedback, as this will help me know if things are fine, and if it's not, I will be able to do the appropriate adjustment. So with that being said, let's dive right into the business for today. And as usual, the first thing we want to be doing is to check on the economic calendar. As you all know by now, that these fundamental factors often manifest on the chart in technical patterns and of course price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns, which will enable us to position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. So for today, I've already, I can't find my economic calendar here today. All right, let me bring it up let's open it up and let's see what is going on from the fundamental aspect. So I normally use the FX trade. Okay, I see your comment, Fred. Good morning to you, Fred. Glad to have you around. Oye Diary Titles, good morning to you. Glad to have you around this morning. So, on the economic calendar, we are going to be focusing on high impact event that will be coming in from the economies on our watch list, which are the US, the UK, and of course the Japanese economies. So for this week, let's see what we have here. And I would like to trim down my filter to include only the datas we need. So we don't need the euro. We don't need anything from Germany. So we shall be focusing basically on the US dollar, the GBP, and if the yen is possible. So for this week here, today, July 31st, Monday, we do not have any high impact event to look out for today. But one thing that I normally do on Mondays like this, I also want to include the medium impact event if we really do not have any high impact event to look at. So I want to include the medium impact event here. So let's see what we have for today. Okay, so for today we have three, of course, from the US economy and from the Japanese economy. So the first one here is the Chicago Purchasing Managers Index, which is a data released by the ISM Chicago Incorporation, and it captures the business condition across Illinois, Indiana, and Michigan. And this index is an indicator of business trend, and it is interrelated with the ISM manufacturing PMI. So we are going to be looking forward to what the actual data is going to be. This event is coming up in about 5 hours from now. And we have a general consensus which projects an expansion in that sector. So we are going to be looking forward to what the actual data is going to be. Then another one is coming up much more later in the day, which is a survey released by the Federal Reserve. And it's approximately 60 large domestic banks and 24 US branches and agencies of the foreign banks. So it also gives us an insight into the open market committee of the US economy in that regard. Then we also have another one coming in from the Japanese, and that is the unemployment rate data, which is released by the Japan Statistic Bureau, and it measures the percentage of unemployed personnel in the Japanese economy, and a high percentage indicates weakness in the labor market, which influences the strength and direction of the Japanese economy. So we are looking forward to what the actual data is going to be like today, as we have a general consensus projecting 2.5% as against the previous data, which came in at 2.6%. So I think there is a positivity in the year on that one. So we are going to be waiting and see what the actual data is going to be like on that one. So with that being said here, we are going to be diving right into the business for today. I hope my sound is manageable out there. If you cannot hear me, please let me know so I can increase the sound of my voice to make things a little bit better for you guys. So let's move right into the business for today. And as usual, the first financial asset we are going to be taking today is, of course, going to be the US oil. So, all right. So, on the US oil this morning, I hope we have been, for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten an update in that regard on how we are going to be managing our positions for today. But before we go into the details here, I would like us to scale up into the monthly or the daily time frame where we can see how price action started the month of July, and let's see how participant in the market has been reacting to the current market structure. So here on the, let's go to the weekly, and if we look at the weekly time frame here, you will see that the market has been actually ranging for a while since the last quarter of last year, as we saw our price action has remained ranging between the what's it called, $82-$83 area, and of course the $64.50 level to give us an insight into the level of indecision in this market. And since the beginning of this month, we have witnessed a couple of seminars and meetings from the OPEC Plus members. And in fact, since the beginning of the year, they have been cutting oil production, artificially trying to increase the demand for oil. And in fact, their benchmark, their target is to have oil prices to sit at $80 mark, where that area could be a platform for new highs. And in fact, in the last couple of weeks now, we've begun to see some traction in that regard. And the OPEC Plus members are having a meeting this Friday, and let's see how the market will be anticipating this event. Is it going to be bullish? Is it going to be bearish? And if you had watched my video on the USOilSPOT, remember we had a key level identified at the $80 mark, which of course we said is going to be serving as our yardstick for trading activity for this week. Now, let's run through my commentary on the USOilSPOT this morning. For those who are with me on the TradingView and Telegram platform, you definitely would have gotten an update in that regard. But for the sake of those who are not, let's run through this quickly. So right here this morning, I mentioned that amidst the current low liquidity in the US oil, trading activities are currently limited to the range between the $80.20 level and of course the $79.93 area over the last 6 hours. As highlighted in the video, the pivotal level to watch for this week is at the $80 mark. The direction of the price ahead of the OPEC Plus meeting on Friday will largely depend on how market participants respond to this key level. It's essential to keep a close eye on market reaction to gauge potential price movement in the coming days. Now, if you look at the chart here, I was able to identify a range where price action has been confined within since the beginning of this week. And of course, you know how we do it in this community. When price action falls into this kind of flat channel, we want to wait for price action to either break out of the resistance line or break down of the support line to give us an opportunity to trade. Now, let's go back into the live chat. And if you look at what we have here, this is the range I identified in my commentary this morning, as you will see. And with the situation here, you know how we do it. We are only going to be looking out for trading opportunities at either the breakout of the resistance line or the breakdown of the support line. Now, with the situation we have here, we already have a buy position triggered as we saw price action break out and retest that structure. So at this point in time, we're currently running in profits on the USOilSPOT as we have about 30 pips running in profit. And for those who are taking advantage of this opportunity, well done to you for being on standby to catch this move. Now, with the situation we have here, it is quite appropriate that we want to be moving our stop losses to secure this current buy position. And I'm of the opinion that placing your stop loss anywhere around the entry zone seems most appropriate, as we, of course, need to give room for price action to breathe. So move our stop losses to that position. And with a well-secured position, let's see how the market will play out from this current structure. Now, for those who had missed out on this opportunity, we have no other choice than to remain patient to wait for new setups to mature before we want to be jumping into any positions. And one of the scenarios that we could look out for if you had missed out on this buy position is to wait for price action to come back and retest that level, something like this. And if continued buy pressure resumes, then we want to be part of an uptrend continuation. So that is one way we want to be part of this bullish move. Then another scenario that we could take advantage of here is this. I've been able to notice that the $80.50 level has been another key level that we also want to be taking into consideration for this week. So we want to be marking out these levels on our chart. So we have the $80.50 level marked out here. You want to mark that level on your chart too as well. As a breakout retest of that structure too will definitely give us an opportunity to add more position to our existing trade. And if you look at how that level has been a major determinant of price action on Friday, we saw what happened here. We saw what happened here. We saw selling pressure coming around that area. And at this point, we will need price action to break out, retest that structure to give us an opportunity to join an uptrend continuation. So if you had missed out on the first buy position we took advantage of at the breakout of the $80.20 level, you can wait for either price retest the structure to give us an uptrend continuation, or wait for a breakout retest of this level to join a bullish move to the upside. So these are my views here on the USOilSPOT for today. So I will be, if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument on our watch list for today. All right. So without further questions, with no questions, I want to assume that we're on the same page here. So we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list for this morning is the GBPUSD. And on the GBPUSD, we have seen here that since the beginning of today's trading session, price action has indeed fall into a range between the 1.286 and of course the 1.28450 to emphasize the level of indecision in this market at this point in time. And you know how we do it in this community when price action falls into this kind of range. We want to wait patiently for price action to give us a signal where a breakout of the resistance line will give us an opportunity to buy, while the breakdown of the support line will give us an opportunity to sell. And let's run through my commentary on the GBPUSD this morning as regards to how we are going to be managing our position for today. Now, looking at the GBPUSD on my public platforms here. So this morning I mentioned here that as we approach the Bank of England's interest rate decision, which is of course coming up on Wednesday, the GBPUSD price action has been confined within the levels of the 1.286 and the 1.2845, signaling a significant level of indecision over the last 10 hours. Notably, the video mentioned that the price is currently situated above a potential accumulation zone and an ascending trend line. A breakout retest of the 1.286 level could trigger an uptrend, upward continuation, while we must also consider the potentials of sellers' impact as a breakdown retest of the 1.28450 level might lead to a sell-off. Now let's go back into the chart, and in this on this chart on the GBPUSD, it's very important that we take a closer look at the higher time frame to have a background knowledge of what is going on here. Now, if we scale up into the higher time frame, this is what we will see on this chart. Now, can I take it a little step further to go into the daily time frame? Okay, so now looking what we have here since the month of March of this year, it is quite obvious that price action has been very, very bullish. And in fact, we have a couple of trend lines here, which further confirms the strength of the buyers in this particular market. Now, there is something important about the structure. There's a key level here, which we identified in that video that we said we are going to be using to guide our trading activity for today. And if you look at the structure closely, you'll see that we have a level at the 1.285, which of course is a very strong psychological area considering the round figure of that price. And in fact, that level has been a major determinant of price action since the month of June. As you will see here, it was a strong selling niche at some point before the breakout of that level happened here at this first week of this month. Now, you know, from a technical standpoint, when price action breaks out of a key structure, such as the 1.285, as we saw here at the beginning of this month, we expect that at some point in time, price is likely going to come back, retest that structure to incite another wave of bullish momentum. Now, if you look at the structure closely, you will notice that since price action came back into that 1.285, we have noticed buy pressure resume at every point in time. We saw what happened here the previous week, and we saw what happened during the later part of last week's trading session. And one more thing that makes this whole setup very interesting is the fact that price action, this area also shares a beautiful confluence with the ascending trend line we identified earlier. Now, with the situation we have here, we want to see price action respect that trend line, a couple of buy pressure above the structure to give us a sign that price is likely going to be respecting that trend line one more time to push price to the upside. But if price action breaks down the trend line, then we are likely going to be looking out for selling opportunities to join a sell-off in this market. Now, when we scale down to a much more lower time frame, like the 4 hours time frame, we begin to see things more clearly. And one of the key things I notice on the 4 hours time frame is the fact that since the beginning of this month, this area between the 1.285 and the 1.296 has been a very strong demand zone, where at every point in time, sellers' attempt has been negated by the buyers. Look at what happened here. We saw buy pressure resume here. We saw the same thing happen during the previous week, as you will see. And on the last trading day of last week, we saw buy pressure resume around that area. And what this simply tells us is that buyers are really very strong around that area. Now, to help us guide our trading activity for this week, I have a key level at the 1.285, where if price action breaks down that key level, we are not jumping into a sell positions right away because price action remains above a very strong demand zone. So we will need significant confirmation that truly the bearish momentum here is coming to stay. In fact, if we look at the structure, I would rather need price to slice through that demand zone for me to look out for selling opportunities. But what I think here is that we can actually capitalize on a bearish move even before the breakdown of that demand zone happens. Now, to capitalize on a bearish move even before the breakdown of the 1.296 happens, we need to see significant confirmation that buyers are finding it difficult to find new high. So we want to see structures like lower highs, lower lows before we want to join a bearish move. Now, in order to capture any opportunity here, scaling down into the 1 hour time frame, we want to see how the market has been reacting to the structure since the beginning of the week. Now, if we scale down into the 1 hour time frame, this is what we saw. We saw a range where price action has caught within the 1.286 and the 1.28450. Though we had a breakout of structure, but price did not come back and retest, hereby negating any bullish attempt there. And in fact, we saw something like a shooting star candle, which gave us a sign that sellers are actually present around this area. So you can see we have a shooting star candle, which of course is a sign that we might likely be seeing a bearish move. Now, with the situation we have here, the price action just broke down the 1.2845. Let's hold on and see confirmations to happen. So what I want to be looking out here is, since we have a breakdown, I want to see a retest of the structure, continued selling pressure below this area for me to feel comfortable to join a bearish move at this point in time. So now that we have a breakdown of structure, we shall scale down into our lower time frame, like the 1.28450, where a retest of structure continues selling pressure around that area. And most importantly, buyers are finding it difficult to climb back above the 1.28450. Then we can position ourselves for a selling opportunity in this market. So let's keep this in mind. And of course, I will be with you in the trading on the comment section on both my TradingView and Telegram platform to give you updates as at when due. Now, I want you to note that this channel we have here, we will need confirmations to happen before we jump into any positions at any point in time. So let's see how the market will play out. And of course, I will be with you in the comment section to give you an update on what I think we can do to capitalize on the potential move here. So if you have any questions regards to what I just explained here, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. I see your comment, Mansur Hassan. Good morning to you. I'm glad to have you around. Trust you had a wonderful weekend, and thank you for your compliments. I really do appreciate. All right. So in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving right into the next instrument on our watch list. So the next instrument on our watch list for today is the XAUUSD, my favorite. And we can see here that the week has started in favor of the US dollar, as price action has been finding lower lows and lower highs since the market opened for this week. Now, let's run through my commentary first of all, before we go into the details here. Let's see what we talked about this morning as regards to how to manage our positions here today. So, this morning I shared a commentary here, and I said here that as we brace ourselves for a series of high-impact events from the U.S. economic docket, the greenback is showing indications of strength with the emergence of descending trend line on the 1 hour time frame. This raises the question of whether we might see a continuation of the bearish impulse leg that initiated after the positive GDP data released last week. If this scenario unfolds, a breakdown retest of the new weekly support level at the $1,953.40 level could present promising bearish opportunities. However, it is essential not to overlook the presence of higher lows on this chart, which have been evident since last Friday and might incite an uptrend move. Now let's go back into the live chat and see what I'm talking about here. Now the week started here around the $1,960.40 level, as you will see here, and since then price action has dropped to the downside, and in fact it has had lower lows and lower highs in that regard, as you will see. And one interesting thing about this setup is that whenever we start seeing lower highs, you know the next thing we want to be doing is to connect the series of lower highs here to give us a trend line, which of course we can use to guide our trading activity for today. Now, coupled with the trend line here is a range where price action has been confined within since the beginning of this week, and that is between the 1,960 and the 1,953 area. Now, at this point in time, it's still very, very indecisive at this point in time. Price caught within that range, and for us to join any trading opportunity in this market, we need to be very, very patient. So at this point in time, we are going to be using the structures we have identified here to guide our trading activity. Now, like I said in my commentary this morning, for us to join any selling opportunity here, I want to see price action break down. I have the $1,953.40 level, and in fact, we would need a confirmation to happen. So as soon as we have a breakdown of that structure, we want to scale down into a lower time frame where we want to look out for retest of structure before joining any bearish move to the downside. So let's keep this in mind. The 1,953 level is going to be serving as a major determinant of selling opportunity in this market for today. So a breakdown retest of structure should welcome selling opportunities, and let's have our stop losses sitting anywhere above the 1,957 level, which will dovetail to between 35 to 40 pips on this single one. So let's see how the market will play out at this particular point in time. Now, another thing I would like to call our attention to here is the ascending trend line I was able to spot after connecting the series of higher lows since Thursday's trading session of last week. Now, one thing we notice here, despite the strong impulsive move to the downside, is that price action has found higher lows, giving us a scenario that we might likely be seeing a retracement of that impulsive move. Now, we can see buy pressure here. We saw buy pressure here on Friday. And since the beginning of this week, though price action has been very bearish, we can see that as soon as price action tested the $1,953.40 level, we have been noticing buy pressure around that area. Though we have lower highs in this market, but we cannot ignore the potentials of buyers at this point. And that is why I have said here that for us to sell, we want to see a breakdown of that $1,953.40 level to happen. First of all, then a retest of structure to give us a confirmation before joining. Because a breakdown here could turn out to be a false breakdown, and we don't want to get caught up in that scenario. So let's ensure that we wait for confirmations to happen before we join a bearish move. Now, with the higher lows we notice here, coupled with the ascending trend line we've identified here, we might likely see a bullish momentum. And for us to join a bullish move, I would want to see price action take out the descending trend line, giving me a sign that the descending trend line will no longer have the capacity to continue to negate the bullish attempt. And mind you, when the breakout of that level happens, it would have also broken out of this level here at the $1,956.50 level. So a breakout happens, we want to wait for a retest of structure. It could be the retest of the $1,956.50 level, or the retest of the ascendant of the descending trend line, where I want to look out for patterns and structures that will support the idea of buying the XAUUSD. And if price comes back above the 1,956, I want to be buying and adding more position if price breaks out and retests the $1,960.40 level. So this is how we are going to be managing our position on the XAUUSD this morning. So our center of focus right now is between the 1,956 and the 1,953 area, where depending on how price action reacts to the zone will determine how we are going to be jumping into any positions for today. So let's keep this in mind. Let's mark these levels out on our chart and let's use it as a guideline to guide our trading activities for today. But if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section, as I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument for today. I see your comment, Master. Thank you very much for your compliments. What can I do? I have no choice. We have to make money. We have to go into the market to make money. And of course, I can leave you in the dark. I did an update, a follow-up detail, and of course, we really need to follow up on the financial assets on our watch list this week. If we don't, then we're going to be left in the dark. And of course, we also want to take advantage of potential trading opportunities for us today. So I have no other choice than to be right here. And thank you. I really appreciate your concerns, Master. You're welcome. So in the absence of no questions, I want to assume that we're on the same page here. So with that being said here, I will just move right into the USDJPY, which of course is going to be the last instrument on our watch list for this week. So the last instrument on our watch list for today is the USDJPY. The USDJPY was one interesting trade for us last week, as we were able to capitalize on a very interesting setup. Joining that bullish momentum, remember we had a failed attempt. On Thursday before we finally captured. We had a failed attempt here on Thursday before price dropped to the downside following the CPI data from the Japanese economy, and we were lucky enough to capitalize on the second attempt by the buyers to push price to the upside. And since that moment, price action has been climbing and finding new highs. And for those who held their positions over the weekend, well done to you for being patient and moving your stop loss, securing your positions and leaving your positions over the weekend. As if you had done that, you will be in a massive profit at this point. Now, this morning, I shared an update on the USDJPY as regards to the current market setup. And for those who had not watched my video on the USDJPY, I implore you to watch that video, as you will get a better understanding of what has really been going on in this market and how we came to the point of having these key levels and structures we have on this chart. Now, before I go into the details here, let's go into the TradingView platform, where I shared an update this morning as regards to how we are going to be managing our position on the USDJPY today. So I shared a commentary here this morning as regards to the setup here, and I said, building on the momentum from the previous week, the USDJPY has kicked off the new week with a robust impulsive move, breaking out of the 141.150 level. This sets the tone for a potential uptrend continuation. Now, it remains to be seen whether the market will choose to retest the recently broken level as part of an uptrend continuation, or if it will form a trend continuation pattern that could lead to a breakout retest of the new high at the 141.950 level. So I said here we are going to be talking about this in detail during our live session today. Now, let's look at the USDJPY chart right here. And if you look at what happened this week, it has been a phenomenal uptrend move. And in fact, personally, I missed out on this breakout of the 141.150 level as price action climbed to find new highs. Well, for those who are taking advantage of that move, well, I can't say anything but kudos to you for being on standby to catch that move. But personally, I missed out on that one. And when I was sharing my commentary this morning, I told us all that since we already have a breakout of the 141.150, that we can wait for price to come back and retest the structure to incite another wave. That was one of the scenarios I mentioned in my commentary this morning. And I said that if that does not happen, then let's wait and see if price will form a trend continuation pattern where the breakout retest of the 141.950 will welcome the buy position. And for those who had missed out on the breakout of the 141.150 here, I hope you are able to take advantage of the breakout retest of the 141.950. And if you are taking advantage of that move, well done to you for being on standby, as you will currently be running with over 50 pips in profit at this point. And you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving our stop losses to secure our current buy position. And for those who are taking the advantage of this move right from the 141.150, of course, you do want to be moving your stop loss right now to secure this current position. But personally, I will be saying that anywhere around or below the 141.950 seems most appropriate to secure this current buy positions while we wait and see how the market will react to the structure. So price is continuing to the upside and the uptrend still seems very, very strong at this point in time. So we can be considering selling on this current market structure. So let's see how the market will play out in the next couple of hours. And of course, I will be giving you updates as at when due. If there are any new setup and significant interesting setup that comes up, trust me, I will be sharing them with you on both my TradingView and Telegram platform. So with that being said, we are done for today on the Forex Morning Mastery. So if you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to read through the comments, and you can as well use that time to mark out your skill levels on your chart. All right, so I see some couple of comments in the comment section. Let's run through this quickly. Hoyedari is asking that if I subscribe to ProFirm, can I follow to pass the challenge? Well, I'm not sure how I would answer that question. Can you follow me to pass the challenge? Well, I don't know what the challenge is all about, and I don't know what your goals and intentions are when you follow the ProFirm. So what we simply do here is to guide on decision making on how to position ourselves for trading opportunities during the New York and the London session. And if you have been following me, of course, I know you have been following me, you will realize that I normally identify ranges, zones, key levels that we want to be using to guide our trading activity. So if you look at, for instance, the USDJPY, for instance, this morning I mentioned that we have a level at the 141.950 where I said a breakout retest of that structure should be an opportunity for us to buy. So of course, if a breakout retest of that structure happens, definitely you want to buy that asset at that particular point in time. So if you are going to be talking about ProFirm and how you want to follow, then I will suggest probably we talk one-on-one. You can contact me on any of my handles. We can talk and let me have a better understanding of what you are trying to imply with that statement you have made. So I look forward to hearing from you, Oidari Titus. And I saw your comment from Adam Ishak, Innocent Babe, right? I'm very sure that's Innocent Babe. Well done to you. I'm glad to have you around, and thank you for the compliment. Amen, amen, amen. Thank you very much. I really appreciate that, Adam Ishak, and I'm glad to have you around and do hope you had a wonderful weekend. So with that being said here, we shall be closing in on today. Adam Ishak is asking if I can take on the US Tech 100. Adam Ishak, please, I would need some rest at this point in time. I would, you can be part of my session on extra speed. And of course, in 4 hours from now, I'm going to be uploading my US Tech 100 on this YouTube platform. Of course, you will get a notification in that regard and you can see my ideas on that one. I already have a very simple setup that we are going to be using to guide our trading activity on the NASDAQ, but I will be sharing that on the extra speed. And if you can be part of that session in about 30-40 minutes, it's okay, that's fine. And if you can't, then you can be part of the, you can see the updates, the replay of the live session here on my YouTube channel in about 3 hours from now. So try to be part of that session or wait for the replay of the live session to come up on this platform, okay? I need to take some rest, take some hot water for my throat to heal before that live session happens. So I hope you understand, Adam Ishak, and thank you very much for your understanding. So on this note, I want to call it a day here. And please, if you have found this content helpful in making your independent decision, I seek your support. Support this project. Click on the like button. Give this video a thumbs up. Your likes are very valuable to me. And in fact, it also helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them. So please click on the like buttons. And if you haven't yet, I advise you to follow me on this channel so that you can always get notified whenever I share new updates and commentaries. Then the XAUUSD live monitoring platform is coming up 15 minutes into the New York session, where we shall come here together to manage our positions on the XAUUSD. We see how we enter trades, we see how we manage our positions, and we see how we move our stop losses, how we extend our TP target on that same session. So thank you very much, guys, and I look forward to see you in about 2 hours from now. Do have a wonderful day, everyone. Adam Ishak, thank you for your compliment. I do appreciate that. And do have a wonderful day, everyone. Have a wonderful evening. Bye-bye.